ShopKirana is doing super interesting work in the brand space. So could you talk a little bit about your brand strategy? What is going on in the Indian D2C brand space? How you look at it differently, and how does financing combined with your sort of platform and the data that is already there, how it can change the brand story in India?
India is a market, so retail market is almost $1 trillion now. Out of that, the kind of segment or industry that we operate is grocery, and grocery is now almost contributing $500-600 billion into it. Out of this 600, yes, it is one of the largest kind of a blue ocean thing that is available today for anyone to capture. And in terms of how we are seeing it is very simple. So the e-com in India is doing, suppose, $40-50 billion will be reaching and have aspiration to be $100 billion industry. At the same time, modern trade is contributing almost 8-10% out of this $1 trillion. We believe the remaining 90%, which is also, so when e-commerce is $50 billion, the remaining $1 trillion is already growing by 5-10% and adding another $50-100 billion into it. So actually the size of e-commerce, the entire size of e-commerce is engulfed by the industry within a year, and that creates a huge opportunity here. So ShopKirana is trying to actually, versus creating a new channel, trying to make the old traditional channel in a new age way. So initially we thought small brands will be only interested on our platform, etc. But that is not the case. So suppose take an example of the bigger companies like 1,000 crore company like Bajaj Almond. So Bajaj Almond have a very, suppose, a small portfolio of the product. When they reach to a retail store, they do not have enough things to offer. When they do not have enough things to offer, so procurement requires a salesperson visiting to retail store, then convincing him to buy the product. At the same time, then you have to ensure you have delivery mechanisms in place, which is great infrastructure because it's a very large diversified country. Then third thing is you are giving him all the solutions to make digital payments, etc., etc. So his service level and next generation payment solution should be available. And then sometimes you have to finance. Now, when we actually saw the data, even the big companies like Bajaj Almond cannot go to every store. So they also decide, these are the large retailers, I will go, and then rest will happen automatically by demand supply gap, or whether there's a gap, that will let it be the gap because I do not have enough infrastructure to support. But when we come into picture and when they plug the things into our supply chain, every brand now can reach to every store every day, and that is our core. So today ShopKirana bridges the gap between, like, a lot of retailers don't have access to a lot of brands, but now every brand is having access to retailer, and every retailer has access to every brand. It is democratic now, and at the same time service levels are of next generation. And for a brand, how it is solving a problem is very, very important. So what was happening, Unilever made their own infrastructure, ITC made their own infrastructure, Dabur made their own infrastructure, and that became their asset and moat. And it was not allowing newer brands to enter into market, because this kind of infrastructure small brands cannot make for themselves. So what started happening when e-com came in market and when modern trade as a channel came in market, a small brand became D2C. So they thought हम e-com पे करेंगे, हमारे पास कुछ infrastructure नहीं है तो हम Amazon से brand बनाएंगे, because it's a new channel and it's democratic channel. If you have a great brand, you can go and build your own brand there. The same thing started happening in modern trade, also newer brands entering into modern trade and replacing the big boys. What about the big traditional channel? How to enter here for the smaller and newer brands? Because there is no democracy here. There is no new way of working here. And when a new brand come on our platform and plug in themselves, and with the finance as a solution, they get lot of advantage, because they go to retail store, they tell them, you buy from us because you need not to worry about your investments, because there is embedded finance, and we as a ShopKirana are solving that problem. Because a lot of newer brands, when they enter into market, actually they need this delivery infrastructures and order taking infrastructure across the country. Another problem is finance. A retailer is very cautious about return on investment. How fast my how fast my investment is turning around in my shop. So I just take an example. Suppose you go into big bazaar, you will find plethora of products there because they are financed by someone, and brand is okay to give credit to big bazaar. A lot of banks are also giving credit to hold that inventory into big bazaar, but this guy do not have that choice. Neither the new brands were able to give credit because new brand also do not have a lot of big pockets, so they do not give credit to this retailer, and they cannot actually because they don't have that much funds. They cannot assess the risk actually because everyone is new, so they are also new, retailer is also new, they cannot assess the credit worthiness of this retailer. But when the finance is already embedded on a platform, this credit worthiness, risk assessment of a retailer, movement, whether this he can sell, he cannot sell, everything is available democratically to these newer brands and newer SKUs. Hence, they just go, they just sell, tell them because you don't worry about the finance. This platform is there, it will give you finance. Keep the new inventory. Hence, newer brand can actually not only on e-commerce or modern trade, now can build brand using platform like ours. And yes, finance is very big angle into it. When new brands enter into a store, his store owner is very sensitive about his investments and returns. So, and obviously they move slow, so it is not like he also know brand, also know brand वाला भी उसको बोलता है कि यार just keep it, if it sell it's okay, if it does not sell I'll take it back. But the point is, why should I invest? Then embedded finance comes into picture. Until you don't invest, you have enough funds supported by your behavior over a period of time on the platform. So you just keep the product, and if it does not work, the entire chain can be reversed.
Deepak, it would be great to understand if there is a strategy manager at a recently successful D2C brand who want to crack general trade as a channel. How could ShopKirana enable this? What should their strategy be, and how would they go about it?
Right. So we have very interesting stories here actually, and we are able to work with some interesting kind of people who are not able to crack it and really want to participate in this story and given a project to actually make it happen. And once they start doing it, actually they do not have any visibility because it is not digital, and they are coming from D2C mindset, and here nothing is visible. So it's kind of a plague hole for them where the products will go and get lost sometime. So I'll tell you two examples maybe broadly. One is so one of a dog food importer. He is actually suppose bringing a lot of international brands into this country. He has done good into D2C or digital commerce, but actually want to enter India as a market into using this small store format to actually sell off this product. Not to what problem he have. Number one is how he will find the set of customers, because first thing you need is customer to sell the product. So actually the day he start plugging in, we give him access to our customer base and tell him these are the retailers, this is their behavior. You can deep dive into data on a category level and understand who suits you. Once he is able to qualify that these people suits my kind of target customer base, then his another problem is how I will show my catalog to him, how I get orders, and then when I go and start selling him, he will ask. So primary problems are solved. So when he plug in his catalog, actually a retailer can place an order digitally. His salespeople can also get technology and place an order for kind of this retailer. And we call it DSaaS as a model. So distribution as a SaaS is available to him. This was not available earlier. So we plug in DSaaS for these kind of companies, and we tell them use distribution as a software as a service. Use our data, use our kind of credit worthiness and risk kind of assessment of these retailers. You just go and sell. If you have a great brand which makes sense for a retailer, just go and pitch him. Your service, your financing, everything is taken care of.
Right. So financing is embedded into the entire value prop for brands.
Yes, yes, and actually because when a new brand, anyone who enters into market, and these we are testing with two. So one is this kind of a dog food kind of people, another is kind of the large D2C brands which are now getting built into cosmetics as a segment. Now the entire cosmetics in India, suppose we talk about shampoo, we talk about hair oil or toothpaste or toiletry soap, is sold largely by these small retailers only. Now, when you actually want to suppose build a brand into toiletry soap as a category, now ShopKirana is almost 10% market share hold. We have 10% market share hold in every territory in toiletry soap that we do. Now, if you go on e-commerce data, if you go on modern trade data, you will not find that much penetration in a category. So if you want to do a brand into suppose toiletry soap, you will find a large data to play with and understand what kind of perfumes this city buy, or what kind of MRP the city buys, because some area are rich and where the large size SKUs are popular and these retailers are selling large size SKUs. Some retailers are into an area where the income levels are different and they might be selling smaller SKUs, and he can make his strategy because this city looks like this, my MRPs will work here or my MRPs will not work here, or I have to kind of change strategy in terms of product market fit also sometimes. So I'll give you an example. When a lot of these D2C brand they do e-commerce का एक thumb rule है कि यार 300 रुपए का product होगा तो e-commerce में पैसे बनाएगा 300-400 रुपए का, otherwise it will not make money. The story is reverse in general trade. In general trade, until you have the product which is called sampler, your product will not move like kind of easy flow. So you sometimes have to make a strategy based on the pricing and the MRPs this market accept versus a D2C brand. But if you start with the same product, it will be bit different thing. And also when this brand comes and goes to retail, so although everything is available, like ShopKirana is available, delivery is available, data is available, he has made all the decisions, and finally when he hit the wall, the retailer say, सर इसको आपको मुझे उधार देना पड़ेगा, you have to give credit because I don't know कितने दिन में बिकेगा, so at least I will need 20-30 days kind of my investment should be giving me return into next 1 month. I will try in next 1 month to sell this product, and also you might have demand but I don't know. So then you have to finance. Now this guy have a big problem whether to finance this guy or not to finance this guy as a retailer. But if these embedded solutions are there and he knows his credit worthiness, he already is financed by other people from using embedded finance. He need not to worry about that side, and he can just sell him the product and relax and just focus on actually ensuring that the product is moving from the store versus the store itself is not accepting the product.
Right. Yeah, that's really essential. If you can't even get your product in the store, how will you move the product?